Hello and welcome to Rewind 2025. I'm Parikshit Luthra. 2025 has drawn to a close with 10% gains both on Sensex and the Nifty. This was the 10th consecutive year of gains on the major indices. However, it was a tough year for the stock markets, with India underperforming its peers in Asia and around the world. Manglam Malu wraps up the year that was on Dalal Street.
2025 is over, and with that, it's another year where the Nifty has clocked gains. It's 10 consecutive years of positive moves for the Nifty. Over the last 5 or 6 years, the Nifty has done extremely well. So in that regard, 2025 looks weak. Yes, we ended 10.7% higher, but we were underperformers in the world. So this year was tough. It was resilient. We managed to gain about 10.7% on the frontline index, not so much in the broader markets. But this was also the year where we had to contend with a lot of global and domestic issues. Starting with the Iran-Israel war at the start of the year. Thereafter, we had our own domestic concerns with regards to Operation Sindoor. And then Trump's tariff tantrums. They continued throughout the year. Uncertainty on the India-US trade deal. There was the GST 2.0 transition. A lot of capital moving towards artificial intelligence. Heavy FPI selling, because of which towards the end of the year, we saw weakening currency as well. And because of the GST transition and low demand in the first half of this financial year, we saw low earnings growth too. So all of this meant that the Indian market were underperformers in the globe. If you look at the Indian index in 2025, the Nifty was up 10.7%. Yes, it was up 10.7%, but compare that to Dow Jones, which is up 14%, NASDAQ up 22%, even China, which was up 18%. So a lot of money actually moved to China after its underperformance against India in 2025. It did well. Even if you look at the emerging markets index, it was up 30% as against the Nifty, which was up 10.7%. KOSPI and Spain, both these indices gaining between 50 to 76%. In regard to that, the Indian markets look like they underperformed. And that's not all. The Asian markets, the Indian currency was the weakest performing currency in all of Asia. And if you adjust for the rupee weakness, the dollar-adjusted returns on the Nifty are a mere 5.5%, nearly half of what the reported 10.7% gain on the frontline index was. It was also the year of firsts. We had gold and silver see big rallies. In fact, the first time since near 1972 where the silver index was up over 160%, and rupee-adjusted terms, gold and silver definitely were the stars of this year. It wasn't an equities market, it was a precious metals market. But in that as well, we saw record FPI outflows of $34 billion from the equity markets. There was record funds raised via IPOs, and a lot of that was offers for sale, $22 billion, which is one of the highest that we've seen. And the discipline of the SIP investors continued. Nearly $3 billion every month on an average is what the SIP investors put in the Indian markets, and that kept us afloat and kept the index positive this year. And if you look at the sectoral indices as well, this year was the year of PSU banks, metals and autos. The underperformers were the IT index and the realty index. IT because of the global uncertainty and the flight to artificial intelligence or capital deployment towards that. If you look at, the broader markets, it wasn't the year where your portfolios felt better either. Nifty small cap index was down 6%. The mid cap at an index level was up 5%. But if you look at the BSE 500 stocks, the median return out there was a negative 5%. So more stocks actually declined than the number of stocks which rose in 2025. But the ones that rose from the frontline end, there were a few. Maruti, Eicher, both of them gave you over 50% returns. Shriram Finance was the star out there. And towards the end of the year, we got that MUFG infusion of capital coming in that company as well. Hindalco, Bajaj Finance were notable gainers. But among the notable losers, yes, there were the IT names as expected, Infosys, TCS, HCL Tech. But Trent, after seeing big gains in the last few years, this year was down in the dumps. Nearly 41% for an index stock for this year was Trent. If you look at the broader markets, there were big gainers coming in the form of L&T Finance, Hindustan Copper towards the end of the year, the big rally in copper prices, underlying metals did well for that stock. AB Capital nearly doubled your money. RBL Bank also had an infusion coming in from an FDI, so that did well. And Laurus Labs was up 81% as well. Performance finally catching up to what the company had promised. But in the broader markets, the underperformers were the high-flying EMS players. These stocks had done well earlier, but valuations were concerning and growth hadn't come by. So Keynes, PG Electroplast, Dixon, all of them down between 35 to 50%. Whirlpool as well, the international promoter looking to pay a stake in the company, and that stock nearly halved one's capital if one had invested at the start of 2025. Like every year, each year has a few extremities. Cupid was one, up 600% in 2025. Then you had Shukra Pharma, Cian Agro, names that we don't usually take, but big movers in 2025. As we wrap 2025, let's look ahead at 2026 as well. The biggest trigger would be a likely US-India trade deal. If that were to happen, that would be positive. The other thing we're looking at, after many months of underperformance, will earnings recover in India? Definitely after the steps that the government has taken. And were both these two to happen, then the FPI flows, which have been on the obverse or the selling side for the last many months, will that return and turn positive as well? All those things happen, then India outperforms. Well, there are likely IPOs as well in the form of Reliance Jio, Oyo, Zepto, many new age and old companies which have filed their IPO papers. So that IPO pipeline looks abuzz in 2026 as well. And finally, can't ever lose sight of the global interest rate and commodity price scenarios. So all these will be important triggers for 2026. 2025 taught you one thing. It's not about being clever, it's about staying put.
All right, so let's see how some of these big stocks perform in the year 2026. Now to the primary markets in Indian equities, which wrapped up their biggest year on record. Fundraising hit fresh highs, deal flows stayed relentless, and execution scaled up in a way the market has rarely seen before. Rachna Dhanrajani reports that this was not a repeat of the easy money IPO cycles of the past. Investors are getting picky.
2025 has gone down as India's biggest IPO year on record. The primary market has closed the year with record mobilization and record deal flows. India was the global leader based on the number of IPOs we had, but it was not a year of easy listing pops. It was a year where as size went up, so did the scrutiny, and investors became far more selective.
3, 2,
According to Prime Database, 103 main board IPOs raised over 1.75 lakh crore rupees, up about 10% from the record high clocked in 2024. Including SMEs, total IPO mobilization crossed 1.87 lakh crore rupees, powered by a surge in smaller listings. The Primary Pulse 2025 report by Pantomith Capital says India ranks among the top 3 markets worldwide by IPO proceeds. But 2025 also marked a shift in the shape of the market. IPOs carried the fundraising load even as other routes cooled. Data from Prime Database shows that overall public equity mobilization fell 18% to 3.06 lakh crore rupees, even as qualified institutional placements and offers for sale through exchanges declined sharply. Despite this lower mobilization, the year saw some of India's largest IPOs to date. Tata Capital led the pack with 15,512 crore rupee issue, followed by HDB Financial Services at 12,500 crores and LG Electronics India at 11,605 crore rupees. The average main board deal size held near 1,708 crore rupees, suggesting the market absorbed large supply without losing breadth. But none of these record numbers have meant record listings. Prime Database says the average listing gain from IPOs fell to around 10% compared with 30% in 2024. Retail enthusiasm also eased. Average retail applications fell to 14.99 lakh from 18.87 lakh last year. A clear signal that price discovery got tougher, a lot tougher. Tougher regulations also played a role in this.
There has been not a great premium listing for some of the larger sized IPOs. But if you look at how the regulatory framework has also changed, SEBI has been very, very mindful of some of these new age IPOs, technology enabled IPOs with large sized startup IPOs looking at listing.
Anchor investors emerged as a big support in the IPO market. Prime Database says anchors took 35% of issuances, and for the first time, mutual funds edged past FPIs in anchor allocation. Qualified institutional buyers, including anchors, absorbed about 62% of the IPO supply. And even as FPIs sold heavily in the secondary market, they still invested 73,000 crore rupees in the primary market.
We did more than 103 main board IPOs, and the execution was seamless. And what it basically meant that one IPO every second day. But that didn't really what happened. What really happened was multiple IPOs getting launched and completed on the same day. I think that was one of the key highlights. Execution was seamless. We saw very broad-based sectoral participation.
These are all strong indicators of a fast maturing IPO market. Another big indicator is the selectivity in fund deployment by investors. Quality was rewarded. Aggressive pricing, particularly outside the strongest themes, was punished. There was also rising awareness about where investor money was going because 2025's IPOs pointed to a clear exit cycle at play. According to Prime database, only 37% of IPO proceeds came as fresh capital. Offers for sale by promoters accounted for 45% of the amount, while private equity and venture capital sellers contributed 12%. The takeaway from 2025 is simple. The window is open, the market has depth, and execution has scaled. But the era of making easy money through automatic listing pops is fading. Investors are willing to play ball provided they can see the goal posts and know they're not going to move on a whim. As we head into 2026, experts say the writing is on the wall. IPO size will help, institutions will set the tone, and valuation discipline will decide outcomes. In Mumbai, Rachna Thandrajani.
All right, let's move on now. We're going to take a break here on Rewind 2025. But coming up, it was a turbulent year for Indian aviation with the Air India crash and Indigo disruptions. A special report by my colleague Madiha Mujawar when we return. Welcome back. You're watching Rewind 2025. It was a glittering year for commodities, especially precious metals. Gold, silver and platinum hit new record highs as the appetite for safe haven investments remained robust. Manisha Gupta wraps up the performance of commodities in 2025.
2025 wasn't just about outperformance in metals versus other asset classes. It was about record highs where themes like renewables, tariffs, rare earth, financialization and policies from China and US led the market to dizzying heights. Well, a year which gave record gains in gold, silver, platinum and copper. 160% gains in silver and platinum and 70% in gold, followed by 43% in copper is what 2025 doled out. In 2025, gold hit record highs 52 times in a year. The year started with nearly $2,650 an ounce. It crossed $3,000 in March, $3,500 in September, $4,000 by the time it was October, and it went to newer highs above $4,550 by the time it's December 2025. The Indian prices also factored in rupee depreciation. It started the year at rupees 79,700 and was last seen trading at rupees 1,40,000 rupees per 10 grams. Posting strongest annual gains since 1979 on the back of US Fed rate cuts, strong central bank buying, and record investment purchases. Silver, in the meanwhile, outperformed gold. It's a smaller and a more volatile commodity compared to gold. Started the year with nearly $29 an ounce. It was $45 an ounce in September, was at a 14-year highs. It crossed $50 an ounce in month of October to hit record highs and then has seen strings of record highs with nearly $25 an ounce of a gain just in the month of December. If you look at the Indian silver prices, well, they saw huge premium, frenzied investment buying, and the prices have gained from an 87,000 rupees to 2,54,000 rupees in this year itself. Not too far behind is platinum, taking out its previous record highs of $2,380 an ounce to make a new all-time high at $2,500 an ounce for this one. Platinum is headed to close 2025 as its biggest annual gain, supported by third year of deficit and a very strong automotive and investment demand for this one as well. We have seen strong gains continue in case of copper, or also called as Dr. Copper, making record highs in US, China, London and India. This is on the back of US tariff concerns. It also has to do with very strong demand that we have seen. Output slowdown in major producing countries like Chile, Peru, Indonesia. Strong demand also from various industrial sectors like AI, electric vehicles, data centers, keeping it bullish also for 2026 in the year to come.
All right, let's see how commodities perform in 2026. Shifting focus to aviation, 2025 turned out to be a year of tragedy and turbulence for Indian aviation. The Air India crash in Ahmedabad killed 260 people in June. The mass cancellations of Indigo flights in early December left more than 9 lakh passengers stranded across the country. But the industry also got some global recognition and some new infrastructure. Madhiya Mujawar looks back at the year that was for the Indian aviation industry.
2025 was a defining year for Indian aviation, a year of tragedy, disruption, and frustration for passengers, but also a year of expansion, global recognition, and new infrastructure. I was on the ground through many of these moments, and here's a rewind of how Indian aviation lived through one of its most turbulent years. The year began with tragedy. The Air India crash in Ahmedabad shook the country. 260 people, including 12 crew members, lost their lives when flight AI 171 crashed on the 12th of June, just seconds after takeoff. Families gathered outside hospital and crash site, waiting to collect whatever was left of their loved ones. 6 months on, the key questions remain unanswered. The preliminary investigation pointed to the fuel control switches moving from run to cutoff that caused both engines to lose thrust. But investigators are yet to establish how the switches moved, whether due to a technical failure or pilot action. The crash dented Air India's reputation, put the airline under intense regulatory scrutiny, and once again highlighted gaps in aviation safety oversight. Just weeks before the crash came Operation Sindoor. As Indian fighter jets struck terror targets across the line of control, several airports along the border were temporarily shut for security reasons. Flights were cancelled and diverted across airlines. Passengers faced last-minute disruptions, but the impact went beyond domestic operations. Pakistan's continued closure of its airspace for Indian airlines put significant pressure on Air India's international operations from North India. Flights to Europe and North America take longer routes now, increasing flying time, fuel burn, crew costs, and operational complexity for Air India. It underscored a hard reality. Aviation remains vulnerable to geopolitics, border tensions, weather, and global events beyond airlines' control. As the year progressed, we witnessed something never seen before. India's largest airline, Indigo, faced widespread, cascading flight disruptions, particularly at the Delhi airport. Hundreds of passengers were stranded, flights were delayed or cancelled through the day. This wasn't weather, this wasn't a one-off technical issue, it was an operational breakdown at scale, unprecedented in India and unheard of for an airline. Even amid these challenges, India's aviation rise was unmistakable. Earlier in the year, in June, India hosted the International Air Transport Association's annual general meeting, the world's most influential airline gathering. Global airline CEOs, aircraft makers, and regulators came to Delhi to discuss the future of aviation. With Air India and Indigo placing some of the largest aircraft orders in history, India has emerged as a critical market for global aerospace companies. What became a proof of India's stake in global aviation was aircraft engine maker Safran opening its largest engine MRO in the world, the largest MRO facility in Hyderabad. It positioned India as an emerging global hub for aircraft maintenance. The move brings jobs, technology, and places India higher up the global aviation value chain. 2025 also delivered long-awaited capacity relief. Navi Mumbai International Airport finally opened, giving India's financial capital a second aviation gateway. Airlines including Indigo, Akasa Air, Air India Express, and Star Air have already launched flights from the new airport. Built with 2 parallel runways, it will allow simultaneous takeoffs and landings, a crucial upgrade for a city long constrained by a single runway at the Mumbai airport. The Navi Mumbai airport features a next-generation terminal, digital passenger processing, and advanced baggage systems designed for faster turnarounds and smoother passenger flow. Adani Airports plans to position Navi Mumbai as a hub for foreign carriers. And finally, signs of resilience among smaller players. After years of financial stress, SpiceJet's fleet in service has climbed to 33 aircraft, its highest in years, signaling a gradual turnaround. Akasa Air, meanwhile, continues to stabilize operations and expand cautiously with a fleet of 31 aircraft now. India today has just 4 major airline groups, with Air India and Indigo controlling nearly 70% of the market. In that landscape, survival itself is a test of resilience. And survival also requires continuous capital to stay afloat. So Indian aviation in 2025 was a year of extremes, tragedy, disruption, and geopolitical stress on one side, infrastructure creation, global confidence, and hard-earned resilience on the other. The ambition is undeniable. The challenge now is execution in an industry where margins are thin and the skies are unforgiving.
Keep it with CNBC TV18 for all the news and updates. Thank you for watching, and here's wishing you a very happy New Year.